Hey everyone! Today we're going to talk about Rivian, especially regarding its most recent fundamental results release. This is big news for Rivian, and I'll break down the key highlights for you. But before we get started, if you find this information valuable, please make sure to like this video, and if you're not subscribed to the channel yet, consider subscribing to stay updated with the latest stock updates. Rivian has just announced their Q2 2023 earnings, and there's a lot to unpack. One of the standout points is a 50% increase in production compared to the first quarter. This is a significant boost in production, which is crucial for the company's growth and financial health. Scaling up production allows Rivian to fund its operations and continue its growth trajectory. It's essential for any automaker looking to make a mark in the industry. Another important update is the addition of the dual motor option. Rivian has incorporated their in-house Enduro dual motor, which they initially developed for their commercial electric vehicles, into their SUV and their trucks. This move not only enhances the performance of these vehicles but also showcases Rivian's dedication to improving their offerings based on customer feedback and technological advancements. Regarding the adjusted profitability guidance, Rivian has improved their guidance for the year, reducing their expected loss from $4.3 billion to $4.2 billion. This improvement reflects their progress in optimizing costs and streamlining operations. While it's still a loss, this reduction in projected losses is a step in the right direction, demonstrating Rivian's commitment to achieving better financial performance. Another encouraging point is the increase in gross profit per vehicle delivered. Rivian has managed to achieve a $35,000 improvement in gross profit per vehicle compared to the previous quarter. This improvement stems from their efforts to ramp up production, reduce material costs, and increase revenue per vehicle. Although they're not yet at positive gross margins, this progress is noteworthy and indicates their path toward achieving profitability. Rivian has also revised their total production guidance for 2023, increasing it to 52,000 vehicles, up from the previous estimate of 50,000. This shows their confidence in their manufacturing capabilities and their commitment to meeting growing demand. While they might exceed this guidance, it's worth noting that they often aim to over-deliver on their projections. Additionally, Rivian has lowered their expected capital expenditures for 2023 to $1.7 billion, down from the previous estimate of $2 billion. This reduction in capital spending showcases their efforts to manage costs effectively and allocate resources efficiently. It's a positive signal that Rivian is working to optimize its spending and focus on achieving its financial goals. Let's also talk about Rivian's customer experience initiatives. As they expand their vehicle fleet on the roads, they're equally committed to scaling their service infrastructure to enhance the customer experience. Rivian has over 280 mobile service vehicles in operation, which handle more than 50% of vehicle repairs. This mobile-first strategy improves convenience and offers a seamless service experience for customers. Furthermore, Rivian has 43 physical service centers in operation, with plans to open 17 more by the end of the year. This expansion of service centers contributes to improved accessibility for customers and demonstrates Rivian's dedication to providing top-notch after-sales support. Their focus on mobile service and convenient maintenance solutions aligns well with customer expectations in today's fast-paced world. In the second quarter, Rivian produced 13,992 vehicles, showcasing a steady increase in production quarter over quarter. This upward trajectory is essential for meeting customer demand, scaling their operations, and achieving positive gross margins. While there's usually a slightly higher number of produced vehicles compared to delivered vehicles due to logistics, the trend remains positive. Speaking of deliveries, Rivian delivered 12,640 vehicles in the second quarter. This increase in deliveries demonstrates Rivian's ability to fulfill customer orders and convert production into actual sales. The continuous growth in delivery numbers indicates their progress in scaling their production capacity and expanding their market presence. Rivian's software architecture is also a significant focus area. They've developed an end-to-end software solution in-house, providing them with flexibility to optimize vehicle performance and customer experiences. Their software integration allows them to implement over-the-air updates and enhance features seamlessly. This approach aligns with the industry's move towards software-driven innovation, giving Rivian a competitive edge. Looking ahead, Rivian plans to introduce a next-generation network architecture in 2024. This architecture aims to reduce electronic control units by 60% and cut wire harness lengths by 25%. These improvements will lead to cost savings, reduced vehicle mass, improved manufacturing efficiency, and simplified electrical architectures. This move underscores Rivian's commitment to continuous innovation and advancing their technological capabilities. Now, let's talk about their financial performance. In Q2 2023, Rivian reported total revenues of $1.12 billion, marking a significant milestone in their journey. This impressive revenue figure reflects the deliveries of 12,640 vehicles during the quarter. It's worth noting that this is the first time Rivian has crossed the billion-dollar revenue mark in a single quarter, highlighting their growth and market traction. However, Rivian reported a net loss of $1.195 billion for the same quarter. While this is a significant loss, it's essential to consider the context of the automotive industry's typical trajectory, especially for innovative startups like Rivian. The focus right now is on scaling production, optimizing operations, and achieving positive gross margins in the future. Looking at Rivian's liquidity, they ended the second quarter with over $10.2 billion in cash, cash equivalents, and short-term investments. This solid liquidity position enables them to navigate their growth journey and invest in their strategic initiatives. Their robust balance sheet reflects their ability to manage their finances effectively and supports their ambitious plans for expansion. In conclusion, Rivian's Q2 2023 earnings report reveals a company making steady progress in scaling production, enhancing customer experiences, and optimizing costs. Their commitment to innovation, software integration, and sustainability bodes well for their future growth. While they're still in the early stages of their journey, Rivian's trajectory shows promise and potential in the electric vehicle industry. As always, investing in any stock involves risks, and it's essential to conduct your research and consider your risk tolerance before making any investment decisions. Regarding whether you should be buying or selling Rivian at the moment, I think that the price action is going to see itself continuously going lower due to profit taking. The floor is relatively low, around $15, so this is why I think that the stock has to find its own support before we re-enter the stocks.